Hello, everyone, and I would like you to welcome at our episode of Fintech Garden. And today I have really special guest and really special topic. So with me is Petr Baron from TBI Bank from Bulgaria, but I think it's more can be called Southern Bank with a really interesting business model and recent news. So welcome to our episode. Hello, Petr.
Thank you very much. It's we call it Southeast Europe because we operate in three markets in the region. Historically, starting from indeed Bulgaria, then moving to Romania, and for now over 3 years already in Greece. So these are our three core markets of operation, and we believe it's a Southeast European region.
I think it can take much more than just Southeast region, but in this case, I was preparing myself for the communication and discussing the episode, and I was trying to find the history of the bank, and it's pretty fascinating. Like in this case, I understood that actually it has been the subsidiary of Garden Group from Netherlands in 2002, I think, and then until 2011, it wasn't even operating as a full banking institution. Correct. And I think it pretty connected with your experience and your history with the institution. So from what public information gave me, you joined about those years when the institution got the full banking license. And one of your role was VP of strategy. And what was it? Like, can you give us a little bit history? What was the time and what were the goals for you?
Well, the history is actually starting indeed in early 2000s when Garden, being a publicly listed Israeli group, but publicly listed in Amsterdam, started developing their what is now probably better known as a fintech strategy. At that time, they first started in Bulgaria with setting up a pension fund, then went into insurance, then went into consumer finance, then into leasing, and then eventually went into banking. And at peak, they had operations, I think, in around 8 markets, including markets like Bulgaria, Romania, Serbia, Turkey, Russia, Ukraine. And this is actually where my paths crossed for the first time with financial services subsidiary TBI, where we were a shareholder of a bank that I was actually leading in Ukraine. The crisis hit them pretty hard on their other assets of a group, so they divested quite a few. All the insurance business was bought up. Insurance and pension business was bought up by Vienna Insurance Group, Vienna Stadische, and they exited basically kind of all the markets except Bulgaria and Romania by 2012, right? So they exited Ukraine, they exited Russia. They had a very, very large bank, now third largest bank, privately owned bank in Russia. The question was ultimately, okay, so we have these leasing consumer businesses, subscale, and it's post crisis of 2008 became really hard actually to finance them. So the only way to finance them was through getting a banking license. So a small bank was bought in Bulgaria. It was a subsidiary of NLB Bank, Slovakia. It was NLB Sofia. And the consumer businesses got merged into it. So it was a monoline kind of offline consumer finance business mixed with a deposit taking capability. And that was kind of the roots, let's say, kind of a banking of a banking beginning, let's say. Yeah.
So how it was planted, because we are Fintech Garden, and actually it's more the story about the planting and cherishing and growing. So that's basically when everything is started. And the times were really interesting because it post-crisis area, because after 2008, with all the issues with the mortgages, bonds, and et cetera, really hit it hard, the world economy, especially like East European market by that time, because like I'm from Ukraine, and till 2008, everything was moving really fast. But then like while economy was not really collapsing, but feeling the pain of those events, I think it's really fascinating that the business merged, acquired the business license. And another angle is the technology, because by that time, the first digital services started to ramping up, like digital banking, access to application, maybe not yet a full financial business applications, but everyone is already using the web applications for accessing the. Did you leverage the digital channels, or what is the story?
So luckily, Bulgaria, Romania were nothing close hit like Ukraine. I mean, because I've had a first-hand experience, and that was extremely tough. Even though the beauty of Ukraine during those years, that yes, of course, the balance sheet got really hit due to kind of all their economic events.
Yeah.
But at that time, you really had their fantastic talent pool, which was really going to work in banks. And that was a short window before the tech companies started sucking up all the best talents, let's say, out of Ukraine, or even ones which stayed in Ukraine, worked mainly for technology businesses, and banks became uncool. Until banks became cool again as a wave of fintech, right? Which was really born here, probably in London, in early kind of
14-ish,
15-ish, 16. So kind of, that time Finovate was really huge. And I remember, the first time that Nick Stronsky presented, his idea of Revolut, and kind of on stage, I was there. I was one of the first people to come up to him, to be honest, because I did think it was a really kind of a breakthrough idea. At that time, TBI was just going under the shareholder change, and actually kind of looking at them at the new strategy. So really a lot of things were happening. And considering that I was coming out of Ukraine, where I really saw the power of technology, how it can impact organization, and really kind of their interaction with a consumer or a business customer, if done well. You also had in 2012 Tinkoff going public, which arguably kind of is really, frankly, the father of really fintech, right? I mean, as him himself, but as and the collection of people, which was fantastic talents, really driving it, proving really the fact that fully online or mobile bank, at that time online still could exist, because previous projects they didn't really pierce through. And then in 2000, indeed, for 14, 15, 16, you had Starling, you had Monzo, right? You had used the Revolut, started, you had Wise,
mushrooms,
right? So really the model of mobile, when mobile became really useful for banking technology wise, so that you could really operate from compliance perspective, from identification perspective, and from user experience perspective, right? This is really, we're looking already at kind of middle of kind of 2015, 16 around there.
So everyone got wrapped around their mobiles. Like, they understood that actually by using computers or the mobile, you can provide digital services more seamlessly, let's say. And it's pretty interesting, because once again, I was reading the history of TBA Bank, and I saw something really unique, because by that time you mostly had like a traditional banks which are operating through branches. They're still against digital services. Like, you hardly might even possible for you to find the digital banking online, or the quality was not up to the date. And then evolution of the banks, or neobanks and challenger banks, which as a Starling, which were the first one, then Revolut, Monzo is popping up. And TBI adopted quite unique model by combining those two advantages. And the suggestion is like a phygital. And how did you come up with this idea, and how fruitful it was that time?
Well, look, I mean, as we had in our pre-discussion before, I think you made a very, very good point that fintech is, fin first, and then kind of tech, right? And I very early on saw really the power of tech, but at the same time, seeing all the crises and operating a real business through those crises, I always knew that the fin part, comes at the end on top. We could never rely on rounds upon rounds on venture investments. So for us, to be profitable in what we do was ultimately key. So in order to reflect that in the business, you look at the market which you operate. Our markets at that time, it was mainly Bulgaria and Romania, were markets for the lowest digital penetration, which clearly identified that there's a huge opportunity when you see where other markets kind of are going. But at the same time, you have to time that opportunity, right? So kind of, if you start too early and the market is yet not ready, well, that's exactly what happened to basically everybody who came before Tinkoff, right? Let's say, or before Nubank, right? Or before Revolut, right? I mean, they were just too early. So for us, it was very important to balance those factors. We knew where it's going, right? It was clear, but at the same time, we had to make sure that the business model works. That's why we combined the relay approach, and kind of phygital was such a natural, to be honest, thing. at that time, everybody was asking me, why are you putting even aside our boards and kind of shareholders and people not understanding why am I so obsessed with phygital and what is this new term that I invented? Everybody knew digital, everybody knew kind
physical,
of offline, physical, right? But that was something new. Later, I'm not claiming that I was the one who came up with it. But I did see that Alpha Bank Russia, which is also a very good bank, to be honest, historically has been a very good, really kind of retail, strong bank, also adopted the phygital model. So for me, it was the right thing for our markets. It was also the right thing to do for TBI in terms of perspective of its future. And even today, we still operate in Bulgaria and Romania, not in Greece. In Greece, we are already fully digital. But in Bulgaria and Romania, we still operate this model because still there is a demand for the customers to be able to access services if they so choose. And frankly, it works very good from marketing perspective. We see from all our research that customers prefer us in many cases to players like Revolut because we have a physical presence, just because they don't need it, but just because they know it's there, right? It gives them certain comfort. Plus, there is still an audience of customers which is unlikely to migrate, frankly, like the older
generations,
exactly, and they, and it's important to serve their needs, and we don't say no to business. But also, there is a great value in the fact that we are able to really educate our customers of digital proposition physically, right? So when they are coming even for a service which they aim to complete in a physical mode, all our processes and education is designed in such training and education is designed in such a way that we try to propose to the customer to migrate so that next time he doesn't have to come, right? Again, if he so chooses, he is free and welcome. We do not demotivate kind of our staff saying, okay, that's it, now you lose the customer because
they still online.
But exactly, because ultimately, we believe it should be there for now, right? Yes, over time, it does make sense that there will be less and less locations, even though me living here, in UK, I have to say the fact that there's almost no branches left is super inconvenient, right? Yes, I can do absolutely most of my things online, but when I do need a branch, damn it, I can never find one, right? Or if I go there, I have to queue for a really long time, and that that is a bit inconvenient.
And that actually tackles the really hot topic which is happening in fintechs, the trust. And how do you think having the physical branches and another person talk to, not through the AI chat or customer support phone, does it enables the business to build more connection and trust from the potential customer?
100%. 100%. And, there's a very good example of that actually in your homeland, Monobank, right, who has a very significant size-wise call center, right, with people. They really pride themselves on making sure that the person who is from the bank and the call center is really aiming to solve a problem for the customer, right? We of course know each other in kind of in the circles and exchange ideas and then pick up ideas, and to me that was a great really kind of great takeaway. I saw the same thing by the way in Kaspi Bank, right? They do this really well, right? That whole feedback is always collected and it's fed into product delivery cycle, and we've picked up these learnings as well in TBI. But the focus really the fact that a person, when you are delivering a digital service, it's a really thin line where of course you want to optimize on one side and you want to make sure that it is AI driven, there is a learning, right, there is a real voice there, etc. But at the same time, that empathy, right, and that kind of drive that a person who's calling with an issue, right, because usually that's why a person is addressing a bank, right, needs support. Exactly. Once they feel that empathy and the desire to help, it helps hugely. And the same for customer service centers. We call our branches customer service centers. When people feel the real care. So for us, we have a lot of internal kind of HR prices and so on, which are not related purely to the business side, right?
Performance and KPIs.
Exactly, but more related to care. It's one of our values. It's one of the things that we put in place, which drive our decision making, who we hire, how we train people, how we evaluate people, is really through values, and it's helped hugely. And one of the values is being caring.
Yeah,
right.
Yeah.
So, and that's across the whole organization, whether caring to your colleagues, right, but even more importantly, caring
about the customers.
about the customers and about the experience.
And I think it's a good takeaway, because a lot of, like, in digital era, a lot of people asking how to build a trust with the pure digital products. And maybe that's one of the answer. Despite being digital, despite being service, something which is sitting in your pocket, there is a still human connection by the customer support, by voice, or by having the branches.
Exactly.
It takes more money, it takes more time to build, but in this case, it may be potential answer why your brand is succeeding on the markets and customers are preferring it. Then we can go to the business model. You highlighted, and I think it's really important to kind of give more details. And from what I feel and what I've read about TBI and the previous organization before TBI Bank, by the DNA, it was a credit institution, like really good with understanding the portfolio, understanding how to do the scoring process, like building the proper customer pool. And do you think the digital affected all this process? Because, like, you got the full banking license, then all the technology came up to the market. Like, what was the best things that you took from the previous experience being credit union, and what you took from the technology by building a strong, like, business model here?
Well, look, just ultimately taking it to the next stage, right? Because of course we digitalized and centralized kind of all the decision-making approaches, data sciences, ultimately key. We're dealing with huge pools. We're receiving millions of applications. So in order to be able to really pick out the goods from the bads, right? In order to both be super quick in terms of decision making, because time to yes, time to money is critical in this business model, but and the merchants, of course, ultimately want highest approval rate, but you don't want to take the loss, right? And neither do they, right? So, or not ready to do it. So, in order to build a sustainable business, of course, you need to have those technologies and skill sets in house. It all depends, of course, also on your scale, right? How much you can invest and deploy, and in order to really automate. To be able to be as right as possible, as often as possible, as quickly as possible, right? Ultimately. So definitely cloud has helped here a lot in our case, because again, operating between the free markets, with our desire to set up our all kind of full stack architecture 3 times over, right? Of course, we wanted to be in the cloud. We want to be able to kind of to change things quickly, and here really the access to all the kind of cloud capabilities and vendors which are already ready to operate in kind of that period of 16, 17, 18, it's been really helpful kind of to drive a transformational change. But the know-how, look, credit is really one of the hardest things, to be honest, to get right
in financial services.
In financial services, it's been always our bread and butter historically of TBI in reality, including in Ukraine, including kind of in all our markets. It's always been credit led. But that model has certain limitations, right? When at the moment where you want to take a meaningful market share and where you see that there are opportunities there, people take credit, but they take it once a year, once every 2 years, once every 3 years, right? I mean,
it's not a daily.
It's not a daily product. Yeah, credit card maybe, right? But again, the person who holds the daily banking relationship, daily relevance. Now, it doesn't have to be daily banking, but daily banking is as good as it gets. To be honest, right? Is the one which is going to be able to nurture the customer and really, build a kind of wider lifetime value ultimately for the business, and therefore reducing both your kind of customer acquisition costs, right, and increasing the lifetime value. So for us, it was clear that to build a proper challenger bank, even based on kind of all the examples, starting from Tinkoff, Nubank, Kaspi, like all the really successful ones, they tend to be credit led first, and then they move into the next space,
Spaces.
either for funding, either because they understand that the opportunity is there and they need to provide more services, and they get really good in providing those digital services to the customer. Revolut is probably an outlier here. They're actively pushing into credit, and I'm sure over time they'll do a good job. They have enough data, frankly, and they
more than anyone, I would say.
Exactly. So I think that eventually they'll undoubtedly crack it and crack it well. In this business, it doesn't tend to be one take all, right? Whether it's because of regulatory support and no regulator wants one single player, whether it's because consumers simply, somebody prefers red, somebody prefers green, somebody prefers blue.
That's why marketing exists.
Marketing exists, right? So and plus there are different niches. Everybody's solving for kind of slightly different problems or has their edge. In our case, of course, it's merchant integrations, and we started historically as what is now became a BNPL business, right? Before it was POS business, right? Then became EPOS business, right? Kind of now
and then
evolved into be everybody calls it BNPL, right? But here we just ultimately saw that our funnel is bringing in customers. We have this great opportunity to offer them more services. We understood that data relevance is key. We saw it in all of our models, and also because of our technology and our setup, frankly, and modern payment rails, etc. We can actually subsidize and be free for the consumer, whereas most of our competitors, all of our competitors pretty much in our markets, they charge customers, right, for anything. Current account, statements, card, notifications. I mean, like everything, right? Because they're trying to drive a commission income. We've always been credit-led, so we didn't really have that much of a commission income in the business. So for us, it's not something like, we're afraid to lose it. It's something we can only kind of build. For these guys, it's really difficult to take a step back, right? So again, it's a clear opportunity for us to offer a nice, clean proposition, which clearly again worked very well. If you look at UK or with Mons or Starlink, number 26, I mean, pretty much all the challenger banks, building a good daily banking product for payments, for debit, right, for your PMF, for savings, is ultimately, covers majority of use cases for the consumers. And then around it, you build kind of already wider proposition to monetize and increase retention, etc., etc., etc.
It's like a hygienic level, like you have to have, because everyone has on the market, and without proper solution or proper digital, like a footprint for the daily banking, I think customers will not stick with the
exactly. Eventually everybody learns to do credit. Right now, eventually, they could spend a lot of time, a lot of money making mistakes, right? But if you have the data from daily banking, if you have that stickiness from daily banking, then you are likely, if you have enough focus and kind of expertise in organization, to eventually crack it. Yes, it is the most hardest thing to do, right? To do it well, to do it profitable, it takes a few rounds of mistakes,
or 2 decades of the experience,
or for sure, undoubtedly. Look, kind of here as banking business, right? Yes, again, today data science it plays a huge role, technology plays a huge role, but ultimately, this is really what banking is about, right? Kind of net interest margin.
Yeah, that's true. And that's about maybe London, like, I don't know, this anecdote, like person asking like why the grass in Hyde Park is so good and green. And the person says, it's pretty easy. You have to cut it for 200 years. So here, I think it's kind of the same. You have to be experienced in the credit products for a couple of decades. And actually, that's the second takeaway that I have today, that a lot of companies, they're trying to reinvent the wheel. But in a financial instrument, there is no so much like business models, I would say. And one of the most powerful is the credit. And actually, that's what TBI Bank and even the institution before the full banking license, which mastered really well, that actually you don't need to rely on the fees on sitting on top of every step of the customer, which is really beneficial for the customer. And having this proper experience with the business model, with the financial insights, with the financial planning, accounting, everything, you build really powerful model, which allows and enables the customers, but also gives a possibility to generate the portfolio fee or profits and margin from the portfolio, which is really great part. And logical question in this case, like how it's built into merchants, like is it an open loop for merchants? Because you actually evolved from POS systems, like providing an ability to acquire. So it started, from my understanding, from acquiring, then involved with the, let's say, buy now, pay later platform. So how do you see the market is right now moving with the merchants? Is it going to be more wider accepted with the platforms like yours?
We're indeed kind of very closed ecosystems. We are completely open, taking completely open approach here. We didn't emerge actually from, we had some acquiring business before. Now we're bringing it back as kind of as a value add for merchants, because way we organize is on one side we have a merchant business, a merchant platform, and then on the other side we have a consumer platform. And the merchant platform is focused on ultimately how to help merchants sell more. And this is where buy now, pay later and other alternative payment methods come in, but not necessarily only alternatives. Like acquiring is not
it's essential things.
It's basically just
mandatory.
Part of a standard package. But where we're really good at is really the kind of the buy now, pay later, and we distributed from offline to partnering with largest e-commerce players, to having mom and pop stores, to having hybrid approaches. And including on card. So, for example, now everywhere we see the PR that now Klarna is moving into banking because kind of we saw the success of Chime, I guess, and Revolut, and so on. Which was, to be honest, the argument I was making all the time that Klarna is a great business, but it's just missing really that banking proposition, and that's where we need to focus on. And seems now they're doing exactly that, and they're doing that. First the card. That's a card we've launched. Actually, our neon card is extremely similar, let's say, to what Klarna.
Or they copied.
I wouldn't go that far, right? But it's possible, right? It does look very similar. But I'm sure they came up with it themselves, because again, they understood that bridge between buy now, pay later and how and credit cards and actually daily relevance. And I think the product that we have and the product they're launching is exactly answering that. It's kind of it's a hybrid product which mixes really buy now, pay later, credit cards, where people want more transparent terms, knowing how much their installments are, but also being able to use the same card in debit form,
transaction,
right? Exactly, right? Because ultimately, you don't need to have any more multiple cards. Even in your wallet, I'm not talking about physical wallet, but even in your digital wallet, right? You can have just one card, right? And again, example of Monobank in Ukraine is a very good example here, because digital interface allows you, frankly, to manage kind of both sides of a card in a very simplistic way. And I think for mass audience, they don't need so many products, right? They need features of those products rather than kind of completely separate products. So we did exactly that, and coming back, so we have multiple ways of basically allowing our consumers to split purchases, including in our in-app shopping as well. So therefore, allowing merchants to have more propositions to the consumers, from small cosmetics to medical services to education to electronics to auto parts. So we serve different verticals through different approaches. Somewhere we integrate deeply into their platforms. Somewhere we integrate into platforms for certain verticals. Somewhere we provide our merchant portal directly to. So we really have kind of multiple ways of doing it, and that's really our bread and butter. Supporting merchants, increasing their sales by allowing consumers to split anything on multiple from multiple tools.
So it's like a generating margin on top of the merchants' margins, not vice versa. So basically, you are enabling their business by providing cutting-edge technologies, portal, and then essentially, if they doing well, then you will do well.
That's the goal. Because look, kind of here it has to be win-win. In fact, win-win-win, right, for consumer, because
it's a triangle.
Yeah, it's a triangle, and of course you need to always balance. And sometimes you have merchants which might be a little bit kind of for them now priority is pure commission, or then suddenly it's pure sales, suddenly it's pure marketing. So it also changes. So merchant relationship is important in this business, but you have to ultimately balance kind of all the sides of this triangle to do it to do it right. But if they're not winning, as a business, then
there is no value.
There is no business,
Yeah.
right? So kind of in that chain, right, you're only as strong as each component.
And I would not forgive myself without like asking this question. This year, it seems to be the year of stablecoin. And like, if I take a look, that's pretty understandable business model with the buy now, pay later, with the fiat, with the local currencies. I'm not sure, like there is a still question about the FX, but do you see the stablecoin being adopted on your level as a part of the business model? Like, do you see future in that in your business model?
I definitely see generally, let's say, kind of a lot of future for blockchain technology, right? Inside banking, and I do expect that fintech, together with some leading banks like JP Morgan, Santander, BBVA, were really kind of forward-thinking banks. Adaptation coming in for certain business models relatively soon, and over, let's say, decade, I see a lot of backend just going kind of to like blockchain overall. Starting from payments, but definitely credit, I think eventually will go in the same direction, right?
That's what I'm asking.
To me, it seems like a very obvious way how banking will kind of depends, of course, on what regulation how it will form. But here, I definitely see the case big time. Are we doing something about it? To be honest, not yet. I always prefer to see a model work well, right, and then take it and adapt it, rather than having to be a complete pioneer. I prefer to be pioneer in our markets, in our region, right? That's why we kind of position ourselves as a regional challenger bank, right? We're not looking to be global player. Our focus is, really, I think it was said really well by a previous CEO of nBank. He said the phrase, I might be a little bit mistaken, but it was steal with pride or copy with pride, right? So so that's something that, that honestly I think is a great idea for banks, because we should also always be risk managing, right? And kind of allocating our resources and our time and investments, right? So I prefer always to see a model working, and then adapting it and being the first one to adapt it to, let's say our markets, right?
With the proper resources, with the proper knowledge and ability to see that something is going to alter how the traditional banks or even neobanks are working is really interesting.
No, what worked, what didn't work, what mistakes they did, trying to take the learnings there, right? So not to be the first one again to because we see that no matter what, no matter how great your product is, it needs constant iteration, right? And here I just have to cut that part out of a process where I can or it takes some of the learners at least, and whether it's just having people who did it and talking to them and taking their learnings, researching the market, the consumer, right? Taking consultants who can advise, but that's a preferred part, because again, one of my learnings from it's Yuri Milner, the DST, one of the most successful venture investors. He had a strategy for a long time, and I'm pretty sure many others did as well, called geographical arbitrage. Right. So you really see that kind of in different parts of the world, you might have a certain business model that is clearly going to be the model of the future, but it's already taken off, and they could be 5, 6, 7, 10 years ahead versus other markets, right? Think of is exactly Kaspi, Monobank, all these kind of all these banks, very, very localized, but at the same time super scaled and super advanced. And then you look at the European market and we don't see banks like this here, right? Now you see more of, again, Monzos, Revoluts, etc. Right? And 26 is not the best example, right? But still, but for sure, this kind of geographical arbitrage, I think, is a very good good idea. And there is a US author who had I think in the 50s a great phrase: the future is here, it's just not evenly distributed.
That's definitely
and that's the exact example you see, and it happens everywhere, right? So that's why I prefer to find it and then bring it and introduce it in our markets, having already seen how it will work. That really helps, right?
Adapt with the local legislation, adapt with the culture, which makes it like click and almost no-brainer product for the consumers, because they have examples on the other markets and they will use. Okay, and actually that's a discussion brings to the natural bridge for me for knowledge in the teams, because that's essential part, and I really want to cover in our episode how you're building the teams and managing. Because if you're going into the business which requires expertise, one of the really hard part is to build the teams and retain talents. What helped you to build this astonishing team that you have, because the results prove itself. Like you've done it well. So what
doing it, I don't consider anything
process.
is ever done.
It's a process.
Right?
I would say
a journey.
It's a journey, like with the product. You never can stop like delivering the product. It's continuous delivery. And the same with the team, because one of the argument for working and retaining the talents is constantly evolving, helping them to be more expertise in the specific areas. But what helped you to build this team? What do you think?
First of all, I need to start with an approach that we take. We're really looking for people that are have challenging mindset, right? So they might come from banking, they don't have to come from banking, but the ones that are looking really to change the way things are, right? We're looking to drive. Majority of people in banks, unfortunately today, and that's where really fintech and banks kind of took different paths. They operate in box mind, kind of, they don't look outside the box, basically, right?
Process
is important, right? Don't take me wrong, right? Process is very important, but completely process over results. Big banks become very political. So we really look at characters, right? The people who are self-motivated, driven, want to achieve things, want to really challenge, and kind of really build, right? So I'm a builder by nature, and I surround myself with people who are, again, have extreme ownership, right? This concept of extreme ownership is very important to me. And the people that we choose are around values, B around, of course, knowledge and kind of and expertise, and then again around this extreme ownership principle. So once you choose the right people who have those combinations, and then the approach is that, guys, look, we need to be really open-minded. We need to be constantly learning. So from my perspective, every day, you have to be reading, you have to be learning, what is happening in other markets, whatever big players are doing, what innovation they're doing, how they're doing, read case studies, watch Fintech Garden podcast, right? Learn, right? Over time, be learning, right? And then have always open mind, right? We never know it all. There's always something new. It doesn't mean new is always better than old. What is better, right? What is exactly what works today, what will work tomorrow, how does it work together? It's critical. So having the right people with the right approach, because I really like flatter organizations. I don't like with too much hierarchy. I like to be closer to the customer. I want to make sure that the feedback is constantly fed into the loop. And ultimately, look, I want people who care, right? And I surround myself with people. Some I've worked for many years. With some are joining the team, right? Because you always have some, unfortunately, people sometimes stop in the development, and they could have been really great for organization in the past. They not necessarily want to take it forward. Sometimes roles change as organization evolves, right? And then that's kind of a continuous process. So you need but consistency in the team is very important. And once you really choose the right people and build the right dynamics between them, I think that's really kind of the secret to success. And our people are just very different type of people to ones which work in our kind of direct competitors, let's say, on our local markets. They're much closer to the people who would be working in in top fintech companies. They just simply choose to live in our markets of operation. And we are very differentiated bank from that perspective. We're a bank which offers the opportunity for people to make mistakes. Because that's the only way in technology business, innovation business, and fintech business, really to learn. How you learn. Big banks don't offer that, right? You make a mistake, you're out. In our case, you make a mistake, you learn. You make the same mistake twice, then you're out, right? But if you've learned on that mistake and you've taken it to the next step, then it's completely different. Because look, everybody makes mistakes. I make mistakes. You make mistakes. Everybody makes mistakes. It's normal. Big rigid banks, they always, because of politics, they look for power games, basically who to hang it on, right? In our case, it's admitting it, right? But again, it's all part of culture. So we are very differentiated by culture, and I think culture hugely helps to both attract, retain, and really allow people to blossom in our environment.
Okay. And actually, that's my maybe third takeaway, because from what I can hear, you build in by regional challenger, you still bring in more West approach, more startup, and the hunger and appetite for innovations. yes, you might do mistakes. Everyone does. Like, I don't know, big companies like Facebook, like they started with Libra, with the blockchain, and they failed. And Zuckerberg is okay because it was ahead of the time.
Yep.
What I can hear, it's a pretty unique positioned situation where by being the regional bank, your differentiator is that you're doing more worldwide and like West approach development engineering, not siloing or structuring the organization all way where you have a lot of different middlemen who don't care. They just generate in the process, and then no one is using like the application and understanding what our real customers are struggling with and want to. So in this case, it's pretty cool. It's pretty deep, like a conversation that we have today. And the last question for today, the latest news that Advent acquired the TBI. And if it's possible, I know a lot of things are still moving, but what do you think it will give opportunity to TBI to deliver to the markets?
Well, look, it's really opportunity for TBI to move on to the next step, right?
Yeah.
Because I think that we are just by becoming part of Advent family, and I see it already from practical terms. The access to really top global specialists is unparalleled, right? So for us, the hungry team, which wants to move fast, which sometimes is doing things for the first time, to get access to the expertise of people who've done it before, who made the mistakes, who made it work, is just amazing. Oh, and so for us and for TBI, I think the opportunity is really to move to the next stage with such shareholder support is super exciting. The team is super excited about it, and the opportunity again is still there, right? Because again, in our markets, I simply don't believe that it will be winner take all. I think that for large fintechs, let's say kind of Revolut, Klarnas, ones which are more European focused, they're going after huge markets. Right, they're going after US, they're going after India, they're going after Germany, they're going after UK, etc., etc. Right, so it's really difficult in our business to stay hyper local,
laser
right?
focused,
on kind of hyper local, right? And it is hard, right?
Yeah.
And you might be following the example of Plata now, which is team of Tinkoff, backed by Mike Calvi and Oleg Tinkov himself and the team from. They're really very focused on one market. Market is huge, obviously. I mean, Mexico is 130 million people. It's quite sizable in itself. But focus on the market and understanding the customer, understanding really, I think is going to help them a lot versus players who are going to be thinly spread. And we've seen models before, yes, pre-digital time, where you're trying to build a global bank, Citi, HSBC, etc. At the end of the day, they do then come to kind of really, what are our core markets? Where do we really kind of succeed? So for us, being hyper-focused on our, hyper-local, hyper-focused on our free markets, I think is a major advantage. Mixed with a phygital model, mixed with a merchant model, mixed with a culture of really people who want to push the needle, right? And really do something great, backed by such a renowned professional investor who's really can identify priorities, back up these priorities, fund these priorities, right? Really give us access to phenomenal global talents to really brainstorm and support on execution. It's just
astonishing,
very exciting, very, very, very exciting.
Thank you so much for warm words. And on this, I think that's a note that we can close today's episode. Thank you, Petr, for coming and having a discussion with us. It was a really deep one and a lot of insights and a lot of takeouts for our listeners. I think it's a really good example for exposing what it takes to build a local challenger bank and what you competing with and what you're struggling with is what is your daily thoughts and updates. So thank you so much.
Thank you.
Thank you. Appreciate it.
If you are building in fintech, whether you're launching, scaling, or shipping at speed, you'll want to check out the Fintech Garden newsletter. Every week, we cut through the noise and share real-world insights for founders, execs, and product teams. No hype, just practical signals, frameworks, and lessons how the things actually get built and delivered in fast-moving markets. Subscribe at the link in the description and start your day with a clarity.